The USDA has blocked businesses connected to the marijuana industry from a key rural loan program. This program was meant to help rural businesses grow, but now, any company with ties to cannabis, even indirectly, faces new obstacles. The decision highlights the clash between states legalizing marijuana and the federal government, which still considers it illegal. Not only growers and dispensaries are affected, even landlords or utility companies serving them can be denied loans. This ripple effect makes it harder for many rural businesses to operate if they have any connection to legal cannabis. The move has sparked debate among business owners and advocates, who argue the policy is outdated and harms local economies. The USDA says it's simply following federal law, but critics see it as out of step with state realities. The rule's reach is broad, impacting economic development in communities that have embraced legal cannabis. Meanwhile, the government's approach to hemp, a related plant, remains much more supportive. As federal and state laws diverge, the future of cannabis businesses in rural America hangs in the balance. We'll explore the details of the USDA's rule, the public's reaction, and what could change if federal law evolves. This is a pivotal moment for the cannabis industry and rural economies nationwide. The OneRD Guaranteed Loan Program, run by the USDA, encourages banks to lend to rural businesses by backing their loans. In October 2024, the USDA updated its rules. Any business earning income from activities illegal under federal law, including marijuana, cannot participate. The Controlled Substances Act classifies marijuana as a Schedule I drug, making all related business federally illegal, regardless of state law. This rule doesn't just target dispensaries, it blocks any business with financial ties to cannabis. The USDA insists it must follow federal law even if states have legalized marijuana. The change was expected by policy watchers aiming to ensure consistency across federal agencies. The agency's stance: no federal support for any business connected to marijuana, closing loopholes for lenders. This rule cements the federal government's hard line, despite the growing state legal cannabis market. The result? A clear message that federal law trumps state legalization when it comes to rural business loans. The USDA's rule impacts more than just cannabis growers and dispensaries. Any business providing services, like landlords, energy companies, or accountants to the cannabis industry, can be denied a USDA-backed loan, even if marijuana is legal in their state. These businesses face tough choices: serve the cannabis market and lose federal support, or walk away from a growing industry. This policy chills economic growth in rural areas that have embraced legal cannabis. Ancillary businesses, from security firms to packaging suppliers, are caught in the crossfire. The rule discourages mainstream businesses from engaging with the cannabis sector, stifling local economies. Rural communities hoping to benefit from legal cannabis now face new barriers to development. The federal stance creates a class of state legal businesses treated as outcasts at the national level. For many, this complicates planning and limits the economic benefits of legalization. The heart of the issue is the divide between state and federal marijuana laws. Most states now allow medical marijuana, and many permit recreational use, treating cannabis businesses as legitimate, regulated, and taxed. States see these businesses as job creators and sources of public revenue. But under federal law, marijuana remains a Schedule I drug, illegal, with no accepted medical use. This means state-licensed cannabis businesses are still considered criminals by the federal government. The result? A legal gray area where businesses can be legal locally, but illegal federally. This conflict leads to policies like the USDA loan ban and makes banking, financing, and even basic operations difficult for cannabis companies. Many are forced to operate in cash, increasing security risks. The USDA's decision is just one example of federal agencies aligning with national law, even when it contradicts state policy. Until this conflict is resolved, the cannabis industry will face unique challenges. The tension between state innovation and federal prohibition remains a major barrier to industry growth. When the USDA proposed its loan ban, it opened the floor for public comment. Every response opposed the rule, arguing it ignored state legalization and would hurt rural economies. Commenters said the policy unfairly punished businesses simply for working with the legal cannabis sector. Despite unanimous opposition, the USDA moved forward unchanged, citing its obligation to follow federal law. The agency acknowledged state legalization, but insisted its hands were tied by marijuana's federal status. The USDA maintains it's not making a moral judgment, just enforcing the law as written. This rigid stance leaves no room for flexibility, even as state laws evolve. The agency's message: until federal law changes, its policy will not. The result is a stark reminder of how federal rules can override local economic priorities. For now, the USDA's position remains firm, regardless of public or state-level pressure. The USDA's approach to hemp stands in sharp contrast to its marijuana policy. Both are cannabis plants, but hemp, defined as having less than 0.3% THC, was federally legalized in 2018. Since then, the USDA has supported hemp farmers, set up regulations, and even included industry voice in policy discussions. Hemp is treated as a regular crop with access to federal programs and resources. Meanwhile, marijuana businesses, even those with only slightly higher THC, are shut out. This legal distinction, based solely on THC content, creates a confusing double standard. The USDA's support for hemp shows what's possible when federal law allows it. However, new restrictions on consumable hemp products are on the horizon, signaling more legal uncertainty. The evolving rules for both hemp and marijuana highlight how quickly federal cannabis policy can shift. For now, the difference in treatment underscores the power of legal definitions over economic reality. A major shift could come from the Trump administration's push to reschedule marijuana. An executive order has started the process to move marijuana from Schedule 1 to Schedule 3, recognizing its medical uses. This wouldn't fully legalize cannabis, but it would mark a historic change in federal policy. If marijuana is rescheduled, the USDA's justification for its loan ban becomes less clear. The agency might have to reconsider its rules, especially for businesses serving the medical cannabis market. The administration has also shown interest in expanding access to CBD products for patients. These moves signal a potential break from past prohibitionist policies, though the outcome is uncertain. Rescheduling could force federal agencies to adapt, but the details remain to be seen. The process is a critical development for the future of cannabis policy and rural business support. The fate of the USDA's loan policy depends on federal marijuana law. Full federal legalization would erase the legal basis for the loan ban, opening up financing for cannabis businesses and their partners. Rural communities could see economic growth as cannabis companies gain access to government-backed loans. If marijuana is only rescheduled, the USDA might allow loans for medical cannabis businesses, but still block recreational ones. This would create a more nuanced but still restrictive policy. If federal law doesn't change, the current ban will remain, and cannabis businesses will continue to face financing hurdles. The outcome of rescheduling or legalization efforts will directly impact rural economies and the cannabis sector. For now, uncertainty reigns, and businesses must navigate a patchwork of conflicting rules. Any shift in federal policy will have immediate consequences for the industry. The stakes for rural America and the cannabis market are high. The USDA's loan ban for marijuana-related businesses is a clear example of the clash between state innovation and federal law. The rule, based on marijuana's Schedule 1 status, affects not just growers, but all businesses tied to the industry. Despite public opposition and state legalization, the USDA remains firm, highlighting the power of federal law. The contrast with hemp policy shows how a small legal difference can have huge economic consequences. The future of this rule depends on federal action. Rescheduling or legalization could force major changes. For now, the policy creates real barriers for rural economies and cannabis entrepreneurs. The evolution of federal cannabis law will shape the industry's future and the fate of rural communities. Change is possible, but the path forward is still